Now, let us understand about personal loan. A personal loan is a loan that does not require collateral or any security and is offered with minimal documentation. You can use the funds from this loan for any legitimate financial need. Like any other loan, you must repay it in accordance to the terms with the bank. A personal loan is an unsecured loan with high interest rates. An unsecured loan is a loan which does not need any collateral or security to keep with the loan provider. Hence, it has and it carries high interest rates upon it. The loan provided is based upon the credit history with instant approvals. Credit history is determined about how many loans have you taken earlier and the repayment history you have paid with amount of those loans. These loans are provided with approximately instant approvals of very minimal time. The purpose of personal loan can be any, like for vacation, for home renovation, for wedding, for medical emergency, for education, for home appliances, for balance transfer, and much more. Talking about an unsecured loan, in case of loan default, bank cannot recover loan dues, but credit score is badly hampered. Credit score is the score that is calculated by CIBIL and it is based upon your discipline in repayment of loans. If your loan repayment discipline is good, then your credit score will also be good. And if your loan repayment discipline is not good, then your credit score will be hampered. In case of personal loan, if you do not pay your dues or EMIs on time, your credit score is badly hampered. The loan size of personal loan amounts to 50,000 to 25 lakhs of rupees. The tenure of personal loan is generally from 1 to 5 years. The interest rate of personal loan is generally on a higher side, which is 3 to 10% more than the home loan. For example, if a home loan waits at 8% per annum, then the personal loan will weigh from 11% to 18% per annum. That depends upon bank to bank. Taking an example, if you take a personal loan of 5 lakh rupees at 15% per annum, then the EMI of this loan will amount to 11,895 rupees, which includes rupees 5 lakh as principal amount and total interest payment of 2,13,698. That will total the amount of more than 7 lakhs. Specifically, 7,13,698 rupees for the loan of 5 lakhs. The lock-in period of personal loan is 3 to 12 months. The categories of how we can repay the personal loan is ECS or auto debit or post-dated checks. Auto debit is a facility that is provided by the bank if we instruct our bank to automatically debit the account on a particular day to repay the loan EMI. This facility is called auto debit. Talking about the eligibility criteria of taking personal loan. The first and foremost thing required by a bank is repayment capacity. The repayment capacity is measured upon the annual income and other loans availed by an individual. The minimum income of a person should be rupees 15,000 per month. The annual income of the person should be legitimate or should be enough to avail the loan. The other loans should also be in coordinates with the loan that he is taking. For example, the loan taking capacity of a person is rupees 50,000 and he already has availed loan. 50,000 means 50,000 EMI per month, but the person has already availed rupees 30,000 per month EMI of loan. So the remaining capacity of 20,000 with the person is left. Now he can only avail loan up to the 20,000 limit according to his income. The second criteria for eligibility is customer profile, which includes the basic uh, occupation of the person. If a person is salaried, self-employed, professional, or businessman. Occupation and income stability is a factor that is taken into account. If the income of a person is stable, then he's most likely to get the loan and of a higher amount. But if the income of a person is not stable, then the eligibility criteria reduce and it may be possible that the person get less amount of loan or he may not get a loan. The age of an individual who is salaried must be between 25 must be between 21 to 60 years for a salaried individual and 25 to 65 years for a professional or a businessman. A professional or a businessman must be of minimum 3 years in the business. Credit score is an important factor that is taken into account while calculating the eligibility of a person. A credit score is a score calculated by many credit rating agencies such as CIBIL, which we also call it as CIBIL score. It should be in accordance with the rules and regulations of bank to bank. One of the most important eligibility criteria is assets and liabilities. Assets and liabilities tells the net worth of an individual, in accordance to which a person gets eligible to take the loan. One more factor that determines the eligibility of a person is number of dependents. The higher the number of dependents, the lower the amount or the lower the eligible a person will get to avail the loan. For example, if an individual have dependents like his wife, his parents, his children, that means that person needs more money to spend in his family and he has less capacity to pay to the bank as an EMI. So that person will get less amount of loan. Another eligibility criteria comes upon spouse income. If spouse is working and it's earning member in the family, then it is a good sign for a loan taker. That person will get loan easily and may also even get a higher amount of loan because their spouse is also working. But if spouse is not working and they are not earning anything, then it is most likely that spouse he will get not eligible to take loan or to take less amount of loan. Another criteria, or we cannot say it as a criteria, uh, the additional charges that are required to avail the personal loan are processing fees, which is 1 to 2% of loan amount, and addition to GST. This is the fees which is used in processing the loan process. The prepayment and foreclosure charges. For example, if the loan availed by a person is of 5 years, but he wants to repay the loan in full in 3 years, then that person has to pay some prepayment and foreclosure charges, which includes floating interest rate, which differs from person to person. In case of payment from own funds, the floating rate interest is nil. In case of loan transfer from one account to another, then 2 to 3% of outstanding loan amount is the floating interest rate. Another concept is fixed interest rate, which amounts to 2 to 3% of the outstanding loan amount. It is fixed. The GST is applicable at the rate of 18% on all service charges. This GST does not account in the account of a bank or any financial institution. This GST is paid directly to the government. Now, talking about the documents required to avail the loan. Talking about the documents, application form with photograph duly signed. Application form contains all the details of the loans that a person wants to avail. Identity, residence, and age proof. That includes documents such as Aadhaar card, house tax, or 10th class mark sheet, or any birth proof. To fulfill these documents, last 6 months bank statements. That simply means your passbook details. Last 3 months salary slips. That is the proof for salaried individuals. Processing fee check. The processing fee which an individual will pay to bank is the processing fee check. Form 16 of income tax return. Proof of business existence. Business profile. Educational qualification certificate and proof of business existence. Last 3 years income tax returns with computation of income. Last 3 years CA certified audited balance sheet and profit and loss account. In case of salaried individuals, only this much documents are necessary. In case of self-employed or professionals, these documents are also necessary. And in case of self-employed and non-professional people, these documents, along with all these documents, are necessary apart from salary slips, because salary slips are basic part of salaried individuals only. Thank you.